So here's just that regular information. They tell you who the person is, and then they say they give you a lot of information. The first thing they give you is checks issued. And what I've done next to checks issued is in green, I've said to you that is input VAT. Remember? Because what will you normally do when you issue a check? You will record the transaction in the cash book payments, and one of the columns there will be your input VAT. And input VAT is money that you are going to claim back from SARS. Okay. So you're paying for something, part of the money you're going to claim back. So everything that relates to checks issued will have input VAT, unless, of course, it is marked with an asterisk. Okay. Then you have the next one there, which is debits on the bank statement. Now, when will your bank statement be debited? When you are paying something. Remember, it's not your statement, it's the bank statement. So therefore, everything that you pay or that goes off against your bank statement is debited. It's good for the bank, not for you, but it's not yours, so it's on the bank statement. So therefore, these debits also will carry input VAT. And they will say to you, it's a debit order for short-term insurance or for checkbook fees or on interest of the overdraft. Then there will be credits on the bank statement. These will normally be FETs that was paid into your accounts or checks that was cashed or whatever. And then you have output VAT. Okay. So you have the receipts for cash sales, another receipt there. And then they say to you, there are other receipts that's not included. Once again, any receipts is output VAT. Because why? When do you give somebody an original receipt? When they pay you. And when they pay you, part of the money that they pay you is due to SARS, so it will be output VAT. So these are common. They are always there and they are always the same. Check issued will always be input VAT. Debits on the bank statement will always be input VAT. Credits on the bank statement will always be output VAT. And receipts not included will always be output VAT. Okay, that is just because it's not reflecting on your bank statement yet, but you actually gave people receipts when they did these normally cash sales. Okay, then the only place where you must be careful is when it comes to the other transactions. Okay, and know how to classify them. So they tell you there were credit losses. Okay. If there were credit losses, it's as if it is an expense and therefore input VAT will be applicable. The same with credit notes. Credit notes means that you are giving somebody a credit note based on previous sales. It's like an expense, therefore there will be input VAT. Okay, now it says, on 31 October, P Home passed a journal entry for interest on the overdue account of a debtor. Okay. It's like an income. Now I know that you know that there is no VAT applicable on interest. But I'm going to show you how for now we have to say it is an output VAT. It's just based on how we actually going to record the transaction, because we must record the transaction even if no VAT is applicable. Okay, so normally if interest would be an income, therefore it could be susceptible to output VAT, although we know interest is exempted. On the 17th of September, Zander Catering purchased good from HL Designs for this amount on credit. The amount was still outstanding on 25 November. Now, it's not about whether the amount was outstanding or not. This is a normal credit transaction. So we've invoiced for this, and the moment we raise an invoice, output VAT is applicable. Okay, so now we have said that everything that we are given, we have said, is it output VAT or is it input VAT? Then they say to you, calculate the total input and output VAT for which B homes can claim or account for on the above mentioned transactions for September, October 29, and this is what we haven't done yet, and complete the VAT return. Now, in this question, I did not complete the VAT return, okay? But I have told you what section you will fill in on the VAT return. So now we go and everything that that relates to input VAT, we put down in this column. Everything, okay? Whether VAT is really applicable or not. So we say trading inventory is standard, okay? On our VAT return, that is section 15. Now don't worry about it. When you have the VAT return in front of you, you will see section 15, okay? So it's standard. So everything that is standard is actually under section 15 or section 14. Section 15 is trading inventory, and section 14 is capital things that you sell for which you can actually claim back VAT. That's the only difference. So then we just do the normal calculation. Now, in this case, because you are trying to calculate the VAT amount and you are given the VAT inclusive amount, the way we do it is we take the VAT inclusive amount, we multiply it by 15, and then we divide by 115. Okay, this is the short way of doing it. Remember what we always did when we do the journals is we take the VAT inclusive amount, then we divide by 1.15, okay? And then we get the VAT exclusive amount, and then the difference between the two would be the VAT. Here is just doing it in one step, and that one step says multiply by 15, divide by 150. Why? Because 115 is the same as 1 plus 15%. Okay, so don't worry, just follow this rule. Okay, so trading inventory is standard VAT, and we are going to put it in there. Office refreshment, we must put it in here, but it is not allowed, and we're going to put it as a 0. Okay, don't leave it out. Put it down and say it is not allowed. Telephone is a standard expense, and but it is not capital, not something of a capital nature. So it's a standard. So trading inventory is standard things that we buy, and telephone is a standard service that we pay for. So we follow the same calculation all along. Multiply by 15 divided by 115. Donations paid to Blue Cross is exempt. Okay, so we cannot claim that on that. Property assessment rates is not a supply. Remember, the property assessment rate is a tax. You cannot pay tax on tax, so therefore it's a non-supply, and you record the 0. The amenities or services, that's also part of your water and electricity account though. The amenities and services, this is your water and lights. That is a standard service item, so you apply the calculation, multiply by 15 divided by 115, and you get the answer. Petrol is 0 rated, so we are going to just record a 0. Stationery for business use. Why did I say stationery for business? Can I just see why on earth? That's a mistake, guys. Sorry. I just want to see what was put in here. Okay, I will have to go back and change this. Obviously, stationery for business use is very standard. I think when I filled it in, I just assumed that it was not for business use and therefore said it was not allowed. Stationery for business use is absolutely allowed. It's just now if I put it in here, it's going to change everything. Well, actually, it won't. It will only change this amount. So stationery for business use is in fact standard. Let me just make that standard. I hate the way that I've actually done some of the things in table design and others. So because it's standard, I now have to go and look and see what we paid for that stationery. Stationery for business use. We'll just record that amount. Copy. Bit of a delay. Trying to scroll, nothing's happening. And then I scroll too far. Okay. So let's just put in that amount there. Okay, I have to multiply it by 15 and divide by 115. That'll give me an answer. Let me just do it on my calculator quickly. Robbing you of time here now. Sorry about that. 1717.01 multiplied by 15 divided by 115 is 223.96. Sorry, I didn't put in the multiplication there either. Okay, and then I must add that 223.96 to the 21 at the bottom, 2122.16 plus the 223.96. So this is now changing. It is 21246.12. Okay, sorry about that, guys. Okay, let's go on. So that was stationery for business use. Traffic fines is not allowed, so we're going to put a 0. Office computer, we are selling the office computer, but that office computer is regarded as a capital item that we are selling. So we're not just putting it under section 14 on the VAT control form. We are not putting it under 15, rather, we are putting it under 14. Just because the form makes provision for normal sales and services and then capital items. Okay. Staff room oven, it's not allowed, so we put a 0. Courier fees is standard. Settlement of a creditor, remember that was dealt with earlier when we received the invoice, so it's a non-supply. The EMP 201 control is a payment to SARS. That is already the tax, so we're not going to claim VAT on that. The plumbing services is marked by an asterisk, therefore it is not allowed and we are not recording it. Short-term insurance is standard, so we apply the normal calculation. Checkbook fees is bank fees, it is standard. Interest on the overdraft is exempt, so even though we paid it, we can't claim it. Credit losses written off, it's standard. And credit notes issued is standard, but there are separate categories for that on the form. And because there are separate categories, we are going to complete section 7 and section 18 on that. Okay, and then we have the total. Then we go and we look at our output VAT. Okay, and what we do is we will say, okay, cash sales is standard and output VAT, that is section 1. Cash sales or sales will just be section 1. Doesn't matter whether it's credit or cash sales, it will be section 1 on the 201 return. Settlement of an account, okay, is 0. But, there is a but. Even though it is 0, we will have to put it on under point 3 on the 201 return. Okay, because there is a category for non-supplies, exempt and non-supplies. They just want to see that. Exported goods is also 0 rated. So it's going to be 0 there, but on the form, once again, under 2A, there is a specific space for it. So there's none of this really that's going on with your input VAT, but with your output VAT, Definitely. SARS wants to make sure they get their money. Advertising income is standard, and you're going to put it under 1. When you actually then go and you sell a delivery vehicle for cash, you're now getting rid of a capital asset. There, with the office computer, you acquired a capital item and you were able to claim the VAT. If you get rid of a capital item, you'll have to pay the VAT, but you're not going to just put it under section 1. You're going to put it under 1A because there is a special category for it once again. Insurance payout. Now, this is very interesting. Look at what's happening here. Your insurance payout is standard rated. And the reason for that is, look here, that your short-term insurance, so every month you are paying your short-term insurance and you are claiming VAT on the premium. Therefore, when the insurance pays out, you are liable to pay VAT on it. But be careful, there is a section on the 201 return that says other, and that is where you will record the insurance payout. Then interest on the overdue account, once again it is exempt, so it is going to be 0, but we still have to put it on there under the exempt or non-supplies on the 201 return. And then of course credit sales is just again standard, and then the amount that you will pay to SARS will just be the output VAT minus the input VAT, and that is the amount that will be due to SARS. Okay, quite a bit of money. Okay, that is due to SARS. Well, you made a sale of 1.4 million, so please pay SARS what's due to them. Very nice sales. And imagine somebody walks in and they want to make cash buy of 1.4 million. You're going to be very happy. Okay, so that is how the question works on VAT, and then you are supposed to actually complete the form. So if on the online one you are asked to complete the form, just be careful, go here, go back to this recording and look where on the 201 return you are supposed to record the transaction, please.